All right, good morning, everybody. Thank you again for joining us this morning. We're always happy to bring you another installment of the Prestige series of COVID-19 webinars. So summer is definitely coming to a close, and we're another week closer to putting 2020 behind us all, which I'm sure we're all looking forward to at this point. But again, my name is Jason Flynn. I'm the Director of Human Resources and Client Services for Prestige PEO. Joining us again this morning is Andrew Lubash, founder and principal of Prestige PEO. I am also excited to introduce Jennifer Robinson as she is joining the Prestige webinars for the very first time. Jennifer is the Senior VP and partner of Risk Transfer, which is a full-service insurance agency that provides insurance solutions, provides insurance solutions for PEOs. She also, on a personal note, happens to be a mean Scrabble player. So we always appreciate when people set aside their valuable time to participate in our webinars, and I certainly am happy that we're able to bring this expertise to everybody on the call today. So as we move on through the webinar here, I wanted to go over the agenda of what we're going to be talking about today. Jennifer will be focusing on the impact COVID has on workers' compensation as well as on the business insurance sector. We're going to delve into the pandemic's impact on cost factor as well as the potential changes in liability. Then we'll also provide some insight into new legislation that has come up as a result of the pandemic. So just as a reminder before I hand everything over to Andy, all participants will be muted throughout the webinar. However, if you do have a question, please use the Q&A feature within the webinar and we'll direct the question to the panelists. Again, we'll do everything we can to answer all the questions. If anything does go unanswered, we will reach out to you and provide that answer to you. And a copy of the presentation will be available on our COVID Resource Center of the Prestige website following the webinar. So at this point, I'd like to hand things over to Andy Lubash.
All right, thanks, Jason. And again, it's my pleasure to introduce Jennifer Robinson. Again, I've known Jennifer probably close, if not more than 20 years. I've worked very closely with her at NAPIO, on the board of directors, on a number of different committees, as well as with Prestige in a lot of offerings that we offer as well. She is a wealth of knowledge and has been around the PEO industry for a very long time. Today, as Jason said, she will talk about risk, workers' comp. During the pandemic, there is a, piece of legislation in the Senate bill that is kind of, holding up, one of the reasons why they haven't come back to the table to try to, negotiate a final stimulus package. But again, Jennifer will go into that, how it will protect employers against what could be frivolous COVID claims. But again, as I've mentioned in the past, and I'll continue to put it out there, again, if anyone needs to speak with me, call me. Again, my direct line is 917-258-0223. That will bypass our switchboard and come right to my extension. My cell is 516-680-5021. Again, if anyone has any questions, you can call me on my cell. I only have one. I don't have two, not the one I don't answer. And or text me if that's easier. And my email is alubash@prestigepeo.com. But again, I think we'll find this very informative today. Like I said, I've sat through a lot of Jen's presentations over the years, and every time I sit through one, I come away learning a little something I didn't know before. So again, I'm going to go on mute. As always, you guys will all applaud. So I'll turn it over to Jen. Jen?
It's a pleasure to be here today. I've worked with, like Andy said, we've worked together for at least 20 years. I've had the good fortune of being in the PEO industry for over 25 years in some capacity. I used to actually work for a PEO in upstate New York, so New York is very near and dear to my heart, even though our firm is based in Florida. We cover PEOs all over the country. Prestige has been a long-term client, and we're really happy to be able to help them and help the small businesses underneath your umbrella. You can go to the next slide, Jason. So this is basically our outline for today. we wanted to talk about COVID and its impact to workers' comp, and then also COVID and its impact to general business insurance. You as small business owners have all the different burdens of an employer to purchase. Workers' comp, for some of you, is a big expense. For some of you, it's not such a big expense, but it's a really important component of your employer responsibilities. Another component that you probably don't talk about as much with Prestige, but it's really critical to your business, is your actual business insurance. Your Prestige has hundreds of clients over all different kinds of industries, and so everyone has different insurance, but everyone has basic general liability insurance. Some people purchase professional liability, which is called errors and omissions insurance. A lot of people are purchasing cyber insurance now, and most of you procure employment practices liability, or EPLI, through Prestige. So we don't really know the full scope of how it's going to affect all those insurances yet, but I can give you some insight to what we're seeing and what we've seen in the last 6 months with all these different types of insurance. It's so interesting. I sit on the national board with Andy as well, which is such a pleasure. And NAPIO created a COVID-19 resource center, as Prestige did, and just the amount of information that's up on that website as well as Prestige's is just a tremendous wealth of knowledge from all the other vendors, other than myself as well. Jason, you can go to the next slide, please. So we're going to talk about basic workers' compensation developments. As most of you know, it's important to denote that workers' compensation statutes can vary very differently by state. I know that most of you on the phone are probably in the New England tri-state area. I know we might have some people on the phone from California and some Pennsylvania, some other states, but there is just a vast difference from state to state. It really depends on the legislature, the political makeup of the state. There's just a lot of different components that go into that. But what's important to know about workers' compensation is that a workers' compensation claim happens in the scope of employment. So the injury or illness must arise out of, in the course and the scope of employment. So that's really important to know. It's always been the burden of the employee to prove that they were hurt or were injured or were sick on the job. And COVID has really kind of flipped that narrative completely upside down. It's important to know. I'm going to go out of order on this slide a little bit, but what's really important right now is that I've listed all the states below that have passed what's called a rebuttable presumption. And a rebuttable presumption relies on an employee having to prove that the injury arose out of the scope and course of the employment. This burden has now been shifted in these states and possibly others. There's definitely other things coming down the pike. So the employer has to prove that the employee did not contact COVID in the workplace. And when I go back to the second bullet on the slide, people ask all the time, in the first few months of the COVID pandemic, well, isn't COVID just covered on my health insurance, right? And as the months went by, legislatures, as early as late March, there were states that said, hold on a second, we've got to ensure that if this worker caught this on the job, then it would be covered under workers' comp. So there's been this completely flipped narrative as to whether it is a covered health insurance claim or whether it is a covered workers' compensation claim. And we are still learning as we go. For example, I sit on an important thing to note also. I sit on a voluntary task force for PEO for COVID. It's about 12 vendors who get together every 2 weeks, and we talk about the different implications within all of our different business segments. I'm fortunate to sit on this task force with the head of one of the largest health insurance companies in your metropolitan area. And at the beginning of COVID, what he said was that the workers' compensation carriers pretty much got a pass. People weren't thinking that these claims should be covered under workers' comp. But all of a sudden the state said, wait a second, these are work comp claims. And these could be work comp claims. So there's the states that are listed here have a rebuttable presumption for essential workers. Essential workers, I think it's important to kind of read a brief definition of essential workers. And again, there's a federal statute for essential workers, and then there have been at least 20 plus additional states that have broadened the definition of an essential worker. Essential workers are those who conduct a range of operations that are typically essential to the energy sector, child care, waste and wastewater management, agriculture, food production, critical retail being grocery, hardware, mechanical, critical trades, construction workers, electricians, plumbers, garbage workers, transportation, nonprofits, and social service organizations. Those are your basic definitions. Obviously, first responders, healthcare workers are obviously essential as well. So at the beginning of the pandemic, there have been certain states that have expanded that even further than those 7 categories that I just listed. So people were really struggling with trying to figure out whether claims were comp, whether they were health insurance, whether they were in a state that has a rebuttable presumption. What's the definition of essential workers in their states? And the prestigious work comp department has been all over this, trying to ensure that if a COVID claim is supposed to be work comp, that it's handled under that. If it's not supposed to be a work comp claim, that your company doesn't get penalized for that. It's extremely important that if a claim shouldn't be work comp, that the team fight that in order to preserve your experience going forward. So I wanted to make sure I mentioned the definition of essential workers. The next thing on the list is California has really been probably the toughest state to have a COVID claim. What happened in California about the 3rd week of April, the governor issued an executive order, and what he stated was, unless that you could prove that your employee was physically working at his or her home office, then anyone that contracted COVID, it would be covered under workers' compensation. You can think about just the massive implication of that in the state of California. The state of California, the workers' compensation system is about a $40 billion industry. And so the executive order stated that from March 1st till July 5th, that unless an employer could prove within 30 days that the employee was working from home, that it would be presumed that that COVID claim must be covered under workers' compensation. So I would say at this point that the costs have been hit the hardest in California. That order has since expired. There is talk of them doing another executive order because there's some additional shutdowns right now in California. So it's kind of news at 11, but we are monitoring this for our customers daily. We've got alerts that go out to our customers to ensure that if anything changes in these states, that we let Prestige and our other customers know as soon as possible and answer any questions that you have. New York, because it's certainly a very important state to Andy, Prestige, and myself. New York has proposed rules on rebuttable presumption. I was very surprised they came out kind of late to the game. Their language states that the employee must show a significantly elevated risk. Obviously, it would be almost impossible for an employee to be able to pinpoint the specific moment in time that they contracted COVID-19. What the state is asking when a claim is filed is, where do you work, how often do you work, and what are your duties performed, and how much you as an employee have contact with the public. So that's really what's going on in New York. Jason, you can go to the next slide. Obviously, there are the obvious potential outcomes due to COVID. I think at this point, we've all unfortunately have someone that we know or love or do business with that has contracted COVID. I think my general theme on this slide is to have you as small business employers understand that some of the long-term effects of COVID can be, short and long-term disability, as we all realize and understand. But there's a lot of information out there, and there's certain statistics that state there could be, reduced lung capacity of up to 40%. We have not personally seen claims with reduced lung capacity yet, but I think that some of those things have remained to be seen. But when you have a reduced lung capacity claim, those claims can get very expensive. The treatment for long-term reduced lung capacities can be very expensive. One of the unknowns, unfortunately, right now for long-term predictability is the state of people's mental health as it relates to COVID. I joke about it sometimes, but even the strongest people, you think about the groundhog effect of what we're dealing with every day, and even the strongest people break. So I think there's a complete unknown. The insurance carriers are very concerned about the unknown of the long-term mental health effects to the system, which is certainly, not something that everybody thinks about at the forefront of their everyday life, but I certainly think it's important to consider, and it's something that we're tracking and that our carriers are tracking. You can go to the next slide, Jason. The future of the work comp market. The work comp market is a tremendously large implication to the financial systems of the country. What's important for small business employers to know as they go into the next quarter and the beginning of next year, and as you all try to plan for your businesses and your budgets. I mean, we're starting to work on our budgets for September for 2021, is the pricing of workers' compensation. And unfortunately, I don't have a crystal ball. Some people say that I do. As it relates to work comp, I do believe that rates are going to creep up due to COVID. I don't think they're going to specifically point to that. The way the work comp pricing system works is that there's the NCCI, which is the National Council for Compensation Insurance, and that's a consortium of large insurance carriers, and it's a non-for-profit group, and they pay to do actuarial studies by state, and they study the health and the work of the work comp system in the United States. That council covers 37 states. The remainder of the states have their own independent bureaus, and they do their own actuarial modeling. So right now, every carrier that we're talking to is saying that rates are going to go up. Our particular book of business, Prestige's book of business, we've not seen a tremendous impact to COVID, and I'm not necessarily sure we will long term. We're hoping that we don't, but there's a lot of unpredictability to it, unfortunately. And the insurance markets, they gauge whether they are successful or whether they fail based on being able to predict the future costs of insurance. So unfortunately, the unpredictability of the COVID-19 pandemic has got them a little nervous and jerky right now, to be perfectly honest. We are in constant contact with all of our carriers, with prestigious carriers, and everybody seems to be doubling down on the PEO business, which I think is just a tremendous tremendous effect of how the PEOs have responded during COVID and all the different resources that they've provided their clients, and that most of our carriers believe that the PEO does a better job managing workers' compensation and providing better outcomes, which hopefully always leads to better rates than you get in the standard market. So we're hoping to not see a tremendous price implication, but we know that it's possible. These slides originally were for a presentation we did that we modified for the NAPIO group, and I left this slide in there because we were talking about carrier insolvencies back in April, May, and June when we did these presentations, and I don't see carriers that write workers' comp going insolvent based on COVID. But you're seeing even the largest carriers in the country and in the world take billion-dollar adjustments and reserving billions of dollars for COVID already. But I don't think they're going to cause the larger carriers to become insolvent, which is good news. The third section of this slide on the claims is, the discussion a couple months ago was, do people litigate against these claims or do they pay them? And I think that different carriers are taking different stances on this, but the majority of the carriers are following whatever the state's rebuttable presumption laws or what the acts that they've enacted, and they're following that. So in some states you're seeing more litigation, and in some states you're seeing they're just paying the claims. But again, back to the health insurance versus work comp discussion, the head of this large New York metropolitan-based health insurance carrier has stated that the work comp carriers really did get a pass March, April, and into May, because the health insurance carriers, the claims came in and they just paid them. They were not going to deny a COVID claim for a variety of reasons. So I think that the tendency is to pay the claim versus fight it, which is obviously the good news. You can go to the next slide, Jason. Just a potential implication as it relates to back to the state of California. Due to the executive order in California, the California WCIRB, which is their independent bureau, is predicting a cost to the system of anywhere from this, and this is a big swag to me. I think it's going to fall somewhere in the middle of 2.2 to 34, almost $34 billion. The NCCI also sets rates, and then state legislatures determine what of the suggested rates the state's going to take. Are they going to take the whole proposed rate increase, or are they not going to take the whole proposed rate increase? And I think we're going to see a lot of political pressure this fall. A lot of states usually raise or lower their rates at the beginning of January. Some states have different dates. But we're going to see a lot of political pressure. Small businesses are under, a lot of their costs are going to increase due to COVID. So I think you're going to see a lot of political pressure to not raise rates very much as it relates to workers' compensation. So you're going to have this push and pull between the insurance system and the politicians saying, we can't be, the small businesses can't afford a rate increase, and the carriers saying we need one. And where we fall will probably be somewhere in the middle. You can go to the next slide, Jason. Does anybody have any specific work comp questions right now? I'm gonna move into the next topic, which is non-work comp related. And again, certainly, as Andy does, I certainly am always available for Prestige clients. We do a lot of work with Prestige clients, so I'm certainly always available. And Jason will certainly make my email or cell phone number available. When we talk about non-workers' comp, we talk about all other business insurance, which there are a host of different types of business insurance that you procure as small businesses to run and protect your business on a day-to-day basis. The most significant thing other than work comp that I think that has come out of COVID as it relates to the insurance industry or the business insurance industry, which is the property and casualty part of the insurance world, is the declinations that have happened countrywide on business interruption insurance. Everybody on the phone most likely buys some type of property insurance, whether they're renting a building, they're leasing space, whether they own the space. You're protecting your property, the contents of the property, and you're protecting what goes on in your building or in the space that you lease. In property insurance policies, there are endorsements and enhancements that I would say about 50% of the population purchases. They purchase what's called business interruption insurance or business income insurance. And if something happens that prohibits your business from operating, business interruption or business income insurance normally comes into play if you have purchased that endorsement and or enhancement. Not everybody purchases this type of insurance. As we get through the first month or so of COVID, really by the end of the first month, people were submitting business interruption claims. People, through no fault of their own, as we all know, have had their businesses abruptly stopped due to government shutdown. And what's happened is the majority, we've literally found 2 policies in our research whereby business interruption did not have what's called a communicable disease or a pandemic exclusion in their business interruption policies. And so obviously the consumer is upset. The consumer is upset because they've been paying for insurance for X amount of years and they did nothing to cause their business being shut down and their business being interrupted. So there's been a tremendous outpouring to the insurance industry, to the federal and state governments to say, how do we get coverage in the case that this happens again, whether it's COVID 2.0, which we certainly all hope won't happen, or whether it's another pandemic 5 years from now. People want to ensure that if the government shuts them down, that they are not going to lose their business. How do we possibly insure for this? So there's a federal bill that's been introduced. It's House of Representatives 6494. You can look it up. It's a very interesting read. And then there's also states, and there's additional states that are pending legislation. And what they're trying to get accomplished here is some type of pool of money in the event of another pandemic for when people's businesses ultimately get interrupted. And what they're doing is they're modeling it after an act that was enacted after the 9/11 tragedies in New York. And what happened after that was the government formed what's called TRIA. It was a Terrorism Risk Insurance Act. And what that does is there's a surcharge on every single policy in the United States right now for terrorism. And it has pooled together a group of money, and then that the government kicks in, that the surcharge kicks in, and that also the insurance carriers participate in. So it's a pooling of money to insure in the event of another terrorist act. So they've introduced the HR 6494 is the Pandemic Risk Insurance Act. So instead of TRIA, they're calling it PRIA, P for pandemic. And the tax and the surcharge that they're proposing seems to be a reasonable number to the consumer, and that what would happen is that the the government would pay a certain portion of the loss. The reinsurance carriers and the insurance carriers would pay a certain portion of the loss, and the surcharge that would be charged on future policies would also pay for a portion of the loss. They're trying desperately to come up with some type of vehicle for people to be protected going forward in the case of an additional pandemic. It's critical that they pass something to this nature, because we know that the small businesses that have shut down, it was no fault of their own. So, you know, we're certainly staunch advocates. We're following this really, really closely. I think obviously there's a lot going on in the federal and state governments right now, as we all know, no matter what side of the aisle you sit on or if you sit in the middle. And they're working on other pandemic relief and financial as we speak. And this is all part of it. I don't know where it's gonna flush out, but I know that that they are certainly working very hard to get this passed and to get or some kind of variation of this, so people don't have this problem of not having coverage for an interruption in the event of a future pandemic. Jason, you can go to the next slide. Back to both the, want to mention a couple of other lines of insurance as well. We're seeing the overall insurance market, unfortunately, react negatively to COVID. As I mentioned earlier, insurance carriers, either they measure their success or their failure based on the ability to predict the ultimate insurance cost, no matter what line of insurance you're in. Some of the other lines of coverage that we're seeing increased pricing on are both cyber liability insurance and employment practices liability insurance. Fortunately, on the APLI side, you're getting the opportunity to participate in a larger group by being with Prestige. So that keeps those rates to a manageable level, which Prestige has certainly done and will continue to do so. And employment practices is obviously discrimination, sexual harassment, et cetera. We're seeing some really interesting claims that the carriers have to defend. Most likely, most of them won't get paid, just really strange and obscure claims. But the insurance companies still have to defend them, which unfortunately ultimately raises costs. Collateralization is probably not as important to this discussion. This was from one of our amended previous slides. But I think the important part, you know, there's a lot that's been going on. But one of the most important things is that what's going on for Prestige customers is that they have carrier relationships that have doubled down on the PEO industry, and they're doing everything humanly possible to keep the costs down. That Prestige has, for most of its customers, they're with Zurich, which is a multi-billion, multinational, A+ rated carrier, and that's really the place to be. They're the best place to be for their customers in this global market right now. They're with a global carrier that has the ability to sustain losses much more so than your typical local and regionalized carriers. So that's about all I have, Andy. I'm happy to take any questions that Andy you might have, or Jason that you might have, or any Q&A from your customers.
Thank you, Jennifer, so much. No questions from me. You know, I will say that I've also had the pleasure of sitting with and meeting with Jennifer at certain APO events, and she always brings, you know, relevant and pertinent information to, you know, every event that I've been to, this one notwithstanding. So thank you so much for your, thank you so much for your participation. You know, we always like having you around, and being able to extol this expertise to, you know, our clients and everybody on the call. So thanks again.
Thank you so much.
So, moving on, that's really going to conclude what we have for today's webinar. The sole focus was on Jennifer Robinson, and that worked out really well. I will say that next week, we will be taking a brief break for the webinar. So there will be no webinars next week. However, we will bring everything back on the following week. As we normally wrap up these webinars, I will say, we will be working on client communications to get this information out to everybody. Please visit the COVID Resource Center on the Prestige website for all of the up-to-date information from these calls, these webinars, as well as everything else that comes down the line. Again, thank you everybody for spending some time with us this morning. I hope you have a great rest of your week and upcoming holiday, and I look forward to speaking with everybody soon.